Alrighty, welcome traders. It is Monday, January 8th, 2024. Good day in the market. S&P shot up 66 points today. So the market's got a little bit of fire going behind them. So let's jump in and see what happened. We'll talk about the markets. We'll take a look at a couple trades because we got to get some trades on. Our theta and buying power has definitely dropped, so we got to get some trades back on. So let's see what's available out there. Take a look at the markets first. All right, so jumping in, here's what we did on the day. So S&P jumped up 1.4%, so pretty solid up day today. You can see here we're coming down on the daily, bounced right off to 21 and just rocketed higher, almost taking out the uh, uh, bearish PSAR signal here. So we moved all the way up to that. MACD, big reversal day, RSI moving higher. Even though the weekly had been tailing off, and still tailing off a little bit this week. So running out a little momentum at the top here. Let's see what happens in the next couple of days. But big update today. Is it all clear signal? We get rocking and rolling because we bounced off to 21. Everybody getting all happy about that. Looking at the Qs, same type of thing. We bounced right off of this 50, between the 50 and 618 retracements from this December low. We bounced right off that area, moved back higher, back over the 21. MACD and RSI heading higher on the weekly, but still weak on the daily, weak on the weekly. And if we take a look at the IWM, a 1.8. Now the NASDAQ was up 2% today, but IWM also up 1.8%. Big reversal day, MACD and RSI here as we really came down. We filled the gap, and now we're headed back higher, potentially breaking back up through the 21. Will this hold tomorrow? I don't know. It was a pretty big one-day move. I would not be surprised to see a little bit of a break tomorrow, but you never know on the markets. Sorry, taking a look at the stocks over their 50-day moving average on the S&P, back up to 90%. So we're right back near the all-time highs. Again, overbought. Put call ratio dropping today. Not a bullish sign. VIX here on the day dropping to yet another just miserable day. $13 on the VIX. There's just no volatility. Now the U.S. dollar on the session today did drop, still struggling to get back above this 21-day moving average, which is in a definite downtrend below the 200. So right now, still in a bullish down or a bearish down move here. We do have a bullish PSAR signal, but overall trend is down daily and trend is down weekly. However, MACD, RSI have been improving. So we're just trying to hang in there. I think dollar's just moving sideways a bit now. Taking a look at the 10-year Treasuries overall on the session, just down fractionally today, but not holding this 40 or 21 EMA here, which is back, below or staying below the 200. So overall, we're in a bearish trend, but weekly MACD trying to reverse, daily MACD moving higher along with RSI. So trying to see a little bit of a rally in bonds, but nothing major. And TLT had a little bit of a bounce today, up almost 1% on the day. But it's just struggling right now with this 200-day moving average that it run up to on the daily, and that's also where the 21 EMA is. So let's see what happens here. I don't have a prediction one way or the other, but I like this pullback on TLT. I like bonds pulling back a bit. I think bonds just stagnate for a while, so we'll keep an eye on where bonds are, but I don't really love bonds to the long side. Don't think they're going to go down significantly. I think bonds are a good strangle opportunity, and I did throw a strangle trade out there today, did not get filled on bonds. I will try again tomorrow, but I'm going to try to strangle the bond trade. All right, 6A, the Aussie dollar on the session today, just up fractionally. British pound up a bit more. on the session today with the dollar dropping, Canadian dollar up just a fraction, and then the euro here up just a fraction, but pretty flat. So I do also like where the euro is, and I do like really where 6A is. I think these can also potentially be strangled. I'm going to be looking to put strangles on tomorrow. So right now, I'm looking at bonds, Aussie dollar, or euro. I probably won't do Aussie dollar and euro. It'll be one of the two forex trades. So let's take a look at what happened in oil today with the word coming out about the Saudis cutting prices here. We've been trying to recover on the weekly, but still in a bearish mode. On the daily, we've still been in a sideways to bearish mode. We just gave back everything for the last 3 days. That's it. It's not like we had a giant crash or something on CL. But what we did do today was we fell enough to give us more trap profit. So I was able to close a piece of the trap for a nice profit. You'll see that when we share some trades from today. But I was able to close and garner some profit from oil. So I think that was a good trade. In fact, we have three things that closed today overall. So we'll cover those and what I'm looking to do. All right, so there's oil down. Maybe that was a big down day. Maybe it was a little bit of an overreaction. I like where we are. Can we hold it in here? Let's see what the markets do. Is this a trend line from, let's say here, up potentially? Looks pretty decent. You've got 3 points on it, which to me makes a decent trend. If we have 1, 2, and then basically 3 touches on it, I think that's a good sign, and we'll keep it there. So we've got this downtrend line that we broke out sideways. It's almost a kind of a dead indicator. Now do we have the beginnings of an uptrend? Now we do have a higher high, higher low, but now we do not have a second higher high. So taking a look at this, are we in a bit of a wedge type of a pattern? So a triangle pattern. We could break up, we could break down. I don't know that we have a ton of momentum to go either direction, but I like CL here. I think oil could be a good strangle opportunity. Let's take a look at gold. Where are we on gold? And by the way, volatility on oil moved up a little bit today, so I think that's a good sign. All right, taking a look at gold as well too. I like this pullback in gold. We had a decent little up, I'm sorry, a downtick today. So gold was down on the session. It's up a little bit in after hours here, breaking below the support line here. MACD and RSI continue to head down. I really like this pullback in gold. I think it's setting up nicely. If we're taking a look at gold as well too on the Tasty Trade platform, IVR of 24, not the best, but it's also not the worst. Oil's at 43. It's a lot better. I'm not a huge fan of trading high IVR or high volatility or looking to C-vol and all these things. I think it can certainly give you a little bit of an edge as far as profit goes. I don't think it changes your probabilities either way. It just changes some of your profit outlook. And on futures, you get such good leverage that is it really a big deal. All right, let's take a look at copper here. Copper, same thing on the day today. It dropped, or it rallied a bit off the 200, but it's been dropping a couple weeks. So we take a look at this thing here, and I really like where copper is too. I tried to actually put in a strangle trade on copper today as well. So I think there is a ton of stuff that can be strangled out there. And then we already touched here on bonds in the market. So we touched bonds when we talked about TLT, but I can probably stop talking about TLT and just focus on bonds because I really don't trade anything except futures. But we'll look at bond futures. Just trying to hold that 200-day moving average. It was maybe a look above this trend line, and then maybe we'll see if it's going to bounce off of this and keep moving higher. MACD and RSI are heading lower on the weekly and the daily on bonds, as I've already said, but I do like the position, and I do like the fact that You've got an IVR of 24. It's not terrible. So good opportunities there. Looking at some of the sectors on the day, it was a big up day today, led by semiconductors up almost 10%. They just cannot be stopped. Looking at biotech, huge day today, just a massive up day back to these levels that we've seen a couple times dating back to August of last year. So we're back to this 94, 95 level. We've been there once, twice, almost three times above the 90 level. We've failed each time, but this looks a little different. And the weekly looks strong, moving up to overbought though, and the daily looks good. A little overbought potentially on RSI. We'll keep an eye on that. And then techs, good day today on techs, up 2.5%. Looking at retail, up 1.7%. Pharma, up 1.7%. XLY, up 1.7% here as well too. Your Teslas and your Amazon, I like the way those are shaping up. So good day today. Weakest sector was XLE, so energy down and falling, and oil down and falling. And then the GDX just breaking below here like gold is, I think, really setting us up for a good trade in GDX. And then looking at the main stocks, everything was up. Apple up 2.4%. Big bounce day for Apple off the 200 MA. Microsoft up $7 almost at 1.9% up, just moving up solidly here. Good looking move. We'll see. And Amazon up 2.7%, good bounce here. So just a lot of stuff just bounced kind of in the middle of nowhere. Meta closing in on some new recent highs on Meta. Google up 2.2%. I mean, all the Magnificent Seven up and looking strong. Google looking very good here. I think we can extend this out a bit. Let's jump into January with it. So extending that and then extending this uptrend line. Okay, a pretty good uptrend line being bounced off now for 1, 2, 3 times and bouncing up. So this ascending wedge, ascending triangle, really here with MACD and RSI heading higher on the daily and a bit on the weekly. I think Google's setting itself up for a pretty good potential run. Nvidia up $31 today, finally breaking this 500. And once it broke, it took off. So big move on Nvidia, finally breaking out of this really, really long 6-month long range it's been in, finally breaking to the upside. Tesla moving a bit higher on the day, still one of the weaker of those stocks. So there's where we were in the markets today. Take a look at the account. All right. So as we jump into the account itself here, here's where we ended up the day. We ended up the day with a 287 delta, which is 0.07%, extremely flat. Just love where we are on delta. Theta is just dying, but a lot of that is just, there's just no volatility in the markets themselves. 658 on Theta, which is 0.16. This is about as low as I've been in a long time. So we've got to get Theta working. I put on a trade end of the day. None of them got filled. So I was late. I was doing a members training session, which went a little bit long today, about an hour and 10 minutes. Really good stuff on how to size your account for the different trade strategies that you choose. So we continue to work on building a portfolio. How do you build your portfolio? How do you construct your portfolio? What's involved in that? And then how do you size each of the trades? So we spent quite a bit of time on that today, how we figure out what size we're going to trade, especially, are we trading MES? Are we trading ES? Are we trading strangles? Are we trading long-term 112s, bear traps? Are we trading standard bear trap trades at 60 days? Are we going to hedge? What are you going to do? Are you going to do SPY leap puts? What trades are you going to put on? You figure out, in my opinion, I think you figure out the strategies that you're most comfortable with, and then let's look to see if we can size those appropriately. Some of those will just knock themselves out of the ballpark because you just can't size appropriately on a small account. But if you can size, then again, you find the strategies that you are comfortable with, not because Tom King said, "Hey, trade the one, the long-term bear trap trades at 120." You can trade them at 90. You can trade them at 60. You don't have to trade them at all. Put ratio spreads. Trade whatever it is you like. Trade spies. Trade whatever. I like to trade strangles. I like the bear trap trades, the 112 trades. I like them at 120 for a campaign. I like them at 60 days for individual trades. So I think you can find what works for you. I love trading those types of things, but I'll also do SPY leap puts if I get a chance through there, and we'll play it by ear. But you find the strategies that you really like. There's a million services out here. There's a bunch of people with Discords that are doing some really good stuff. There's some people with Discords doing some terrible stuff. Okay, maybe you want to find, you got to find what you are comfortable with, not what someone else is doing. And you're watching Facebook and you're getting FOMO because some guy's trading 0 DTE and he's winning $10,000 a day. Well, you know what? The guy's got $1 million account and his size is much bigger than you, and he's got a plan, and right now it's working for him. Then you jump in and you get 10 losers and you quit. Okay. Well, he can weather 10 losers because he's been doing it for 10 years, okay, or 10 months or something like that. And you try it for 3 days, it's a loser, you quit, and you're going to go on to the next thing. Find the strategies that work for you and then size them appropriately for your account and really look at your buying power. So let's take a quick look at net lick here. 405,212, another new all-time high. So we've actually picked up almost $10,000 in net lick this year alone, and we were picking it up every day when the market was going down, and we picked it up again today when the market went up. It doesn't matter what the market does. The market can go up, it can go down. It has no bearing on a neutral account. Okay, so when you're delta neutral and you've got the right trades on, you don't really care what the market's doing. Okay, I'm only looking at those market charts to give myself some indication of what can I invest in next, what's worthwhile. All right, so BP usage dropped today, 223. We've got 41,166 on our bill BP, which means our overall BP use without bill factoring in is only at 45%. We have room to put some trades on. So I think we're going to look. We looked today. I had 3 strangles cooking. None of them got filled by the end of the day, and we'll be putting some of these back on tomorrow. However, we did knock out another $2,000 in daily realized, so we are up $9,400 in 5 trading sessions this year. Okay, so in the first 5 sessions of 2024, we've made $10,000. So we're on a roll. I love what we're doing, and again, it doesn't matter if the market is up or the market is down. We're up, at least so far, and so that's where we are. Those trades are working well. And let's take a look at what closed on the session today. So the first thing that we have here on the day is we did close a strangle. It technically closed overnight because I had a good to cancel order in to close this. Now, one thing you'll notice is this was a $500 winner on copper on a strangle, but it was only a 21% winner. Well, why, Tom, did you close out a strangle at 21% and not the normal 50? Okay. Hey, everybody, you broke your rules. And no, essentially, if you look at the days in trade, I was in this trade for 12 days. Technically, I was in this trade for 10 because I was trying to close this thing on Friday. It happened to close on a Sunday night. So really wasn't in it for a full 12 days. It was actually less. But if you can make 21% in 10 or 12 days versus 50% in 30 to 40 days, which one are you going to opt for? Okay, so 21% in 10 days would be like 60% in 30 days, but 50% is where I would close. So if I can get ahead percentage-wise of what I was doing on an annual basis, I'm going to close. So I did close it early. I took the profit, and I just couldn't get another trade back on. Okay, but it was still an 8% return, and there's nothing better, in my opinion, than strangles for return on capital. And then the next trade here was on ES. We closed a naked put here after 49 days. Here as a standard 112. Okay, so we closed at about 49 days, and again, these come off around 45-ish days, about 75% of the length of the trade. So in 49 days, we managed to close this for 95% winner on the naked puts, $895 there. And then lastly here, we did manage to roll the CL puts of our PDS. So this is just the PDS of an oil bear trap trade. And what we did was we closed the PDS a little bit. We didn't close the whole PDS. We closed the size of the PDS, and we took some profit out of the market. So we took $640 off the profit. We still have 4 contracts of an oil 112 bear trap trade. We still have that going. That's a half a point wide with 4 contracts. So we still have a chance of another $2,000 if oil falls further. So I think that's pretty cool. I think it's fantastic. And we're able to take some profit out. So this oil trade so far has netted almost a 200% return on this trade. So we've almost doubled the amount of money that we were going to take in, or at least I think it's more like 160%, not 200. So, but we're still not done, and there's still a profitable PDS out there. And if oil drops more, we're going to make even more on this particular trade, because right now we're looking at we're looking at another opportunity here to make some more money on this if we go lower. So I'm excited about what we see here, and overall great year so far. But my takeaway for you tonight is put your plan together. It's January. If you don't have a plan, what have you been doing for months now? Okay, you got to figure out your strategies that you want. You got to figure out your risk tolerance that you're willing to take. What's your maximum buying power that you're going to, is it going to be 50%? Is it going to be 40%? Is it going to be 30%? Is it going to vary? I know Tasty Trade has some stuff out there based on VIX. I think VIX is not a great benchmark to figure something out. Hey, VIX is low, so you should only be at 25% buying power. I don't think that's a good measurement of what you can do. I think as long as you are smart about your buying power usage and your hedges, it doesn't matter. Okay, and we're well hedged right now. Could always be better, but we're sitting on a bunch of put debit spreads. We're sitting on long puts that are true hedges out there. We've got a trade plan to stop out at 2x losses if we need to on things. So black swan aside, which is going to be painful for everybody, a good downturn in this market, I feel we're in pretty good shape for, number one. And number two, I really would embrace it. You could see how well we were doing the first couple of days of this month when the market was going down. Imagine what would happen if that continues for a couple of weeks or so. So I'm hoping for some pullback, but if we don't, we go higher. It doesn't matter. We're neutral traders, and we win either way. We win going up. We win even more going down. As long as the going down is fairly slow and somewhat orderly, we're going to win either way. So we had a great 42% gain last year. We had an 80% gain in 22. Okay, and then we had a 35% gain in 21. Why the differences? I'm sorry, 60% in 21. Why those differences? Was because when the market's bearish, like it was in 22, we make a lot more money with our style of trading. When it's a bit bearish, but mostly bullish, like it was in most of 23, we're going to make our normal 40, 50%, something like that. So, all right, if you like this video, click the like button. As always, let's get the likes up. Let's help as many people as we can. If you're not subscribed to the YouTube channel, please subscribe and get the word out. You know, who can we help in your family? Who can you help friends? Who can you get involved? Okay, I don't make a ton of money on this YouTube channel. Okay, YouTube, it's a couple $100 a month or something. It pays for just some of my time to put out free content like this. Okay, but the goal is to help as many people as possible. So if you think this is helpful to you, and get your family, get your friends, get everybody rolling on this so we can figure out exactly how to continually beat the market, beat these hedge funds out there, and put money in your pocket so that you guys have the freedom and the ability to do whatever you need to do. Okay. Money doesn't buy happiness. Well, I disagree. I think money can buy you happiness. Okay. Not total inner peace, okay, but you can certainly help a lot of people. And if you're happy doing that and it buys you freedom to spend time with your family, okay, this is what you should be doing. You've got to put a plan together. Okay? You can't keep just watching and taking on the free stuff and jumping from place to place to place. You got to figure out your trade plan, your strategy, get your sizing right, okay, and dive in, start putting this stuff on. If you want help on that, join our Discord. You're going to get training on it. You're going to get help on that. You're going to get feedback. You're going to get hundreds of members that are going to share their stuff with you, their trading plans. Okay. If you want to learn from dozens and dozens and dozens of successful trading plans, find the one that's close to your likes and your risk tolerance. Jump on that one. Ask questions. We've got extra trainings for people, all kinds of weekly sessions, daily live training sessions, several days. Come and join us in the Discord. Anyway, that's enough on that. You guys take care. Have a great, safe evening. Get the plan together. Get your strategies going and figure out how you're going to trade going into this new year. All right. Take care, everybody. Have a great evening. Bye-bye.